Yeah, that's very fair because there's pros and cons to everything. And I would say the bad thing about the Bitcoin ETFs is the lack of focus on self custody. Because what happens is people will just go into their brokerage account, they'll buy the ETF, and then they'll just forget about it. Now, that could have been the worst decision that I ever made in my life. I could have originally bought Bitcoin and just held it and forgot about it. But the fact that I had to learn how to custody it and kind of take a couple extra steps made me so passionate about Bitcoin. It made me invest my time and energy into understanding more about Bitcoin. So self custody is kind of like an onboarding and education process that can be an orange pill experience. And also, self custody is true freedom. If it's not your keys, it's not your coins. I believe that with all of my heart. So the trade off here is I'm going to buy the ETF and I don't have to custody it. But basically, you're putting that responsibility on whoever the issuer of that ETF is. So if they don't do it right, that's risk. You now have counterparty risk because not your keys, not your coins. That to me is the biggest con. That to me is the biggest negative of the Bitcoin ETF. It kind of neutralizes that self custody orange pill that kind of teaches you about self sovereignty and real true financial freedom. And the ETFs don't trade 24/7, 365. So if
Yeah.
you're a trader or a market maker, I'll tell you one thing that's been working great. If you have dollars and your goal is to create more dollars, which in my opinion, everybody's goal should be stack more Bitcoin, not create more dollars. But the world that we live in, there are people and funds who have dollars and want to create more dollars, buy in the Asian hours and sell it to the Americans. Right? We used to have the kimchi premium
Yes.
in over there. Now we got the Patriot premium. I'm calling it the Patriot premium. It's selling buying the Asian and then sell it to the Americans because they have to buy it overnight. It's actually a very interesting opportunity in the marketplace because the amount of funds that are flowing in are just tremendous. And that kind of brings us to the pros of it. So the cons are self custody is kind of forgotten about. Therefore, the orange pill experience of learning about financial freedom and true sovereignty, it gets muted through that process. But the pros are that this marketplace is now expanding. The levels of liquidity coming into this marketplace are so that it can't be ignored by the big players anymore. And I happen to know that some of the biggest market makers in the world are now interested in becoming a market maker in the crypto industry, which is very interesting because we're only $1 trillion industry, right? You look at the money markets in the fiat world now, you're talking about multi-$100 trillion marketplaces. We are a $1 trillion industry. We are nothing. We are like a little speck on their
That's right.
radar.
Yep.
However, what's happening in this industry, because there's actually true free market price discovery, the market makers are thirsting for this because it turns out in the fixed marketplace, you don't get the same type of price act. I mean, think about the March 2020 liquidity crisis. Prices started dropping, and what happened? All the circuit breakers went off. Trading stopped. There was no free market price discovery. The powers that be say that you're too emotional and you're too stupid to make your own decisions. So everybody take a timeout. All right, we got a 30-minute timeout before this thing starts up again. Well, Bitcoin during that time didn't time out for 1 second. It traded live the whole time through that process, and you had true free market price discovery. So the characteristics of true free market price discovery that are found in Bitcoin, and in my opinion, in Bitcoin only, it might be the only true free market in the world at this point. The natural incentives of a true free market are doing what they're supposed to do and out incentivizing these fixed fake markets that we see in the fiat system. So the biggest pro to me is that the biggest players and the biggest market makers in the game are starting to wake up to the power of true free market. And that's what comes next with these Bitcoin ETFs. Like the next step of Bitcoin ETFs, there's 2 points in my evolution here of Bitcoin. The first is Bitcoin is being institutionalized as digital gold, right? So they're finally listening to us and saying that it's gold. But the problem is that the mainstream is a whole halving cycle behind. right? So what I can tell your listeners tonight is in 2028, what we'll be talking about is how on the news, they're talking about how Bitcoin is digital collateral. It's the most pristine form of collateral in the world. But right now, today, it's just digital gold, right? We got to go for that 12 to 14 trillion dollar store value market cap before we go to the 100 plus trillion dollar digital collateral market cap. But the process of where we are and how to stay ahead of the narrative, the mainstream narrative, is to understand that Bitcoin is not just digital gold, it's digital collateral. It brings to the table what gold could never bring and what US treasuries could never bring, because gold was hard, but it was too expensive to settle. So it failed as collateral. And treasuries fixed that. They became easy and cheap to settle, but it turns out they're too soft. The government can create too many of them at will and ad infinitum. So they're too soft. Bitcoin comes in as the natural evolution of finance. You get the best of both worlds. You get the hardness of gold, except Bitcoin's even harder. But then you also get the fast, easy, cheap, and secure settlement that you get with treasuries. So we're watching the natural evolution of Bitcoin accelerate and integrate into the financial system. The second thing is with these Bitcoin ETFs is what comes next is options trading on Bitcoin ETFs. And that is going to be so, people do not understand how big this is, because the biggest market makers in the world are yield farming TradFi speculators, right? So people say that all the time. Oh, yield farming, and they think that came from crypto. No, where it came from was traditional finance. A couple of the bigger players that actually stepped out into crypto said, "Oh my gosh, the yield farming opportunities in crypto are amazing." And actually, if you pull up the CoinGlass funding rate page, I'm sure your listeners would be absolutely interested to see the potential that we have here. So it's like CoinGlass / funding rate. And while you're doing that, I can talk about what's going to happen with these ETFs, because what we're going to have is not just Bitcoin ETFs, but Bitcoin yield strategy ETFs. And what that does is it's going to increase the levels of demand on Bitcoin, and it's going to increase the levels of liquidity in the marketplace. So you see Fidelity, one of the largest asset managers in the world, they are now buying their own ETF in order to stick it into their other ETF products, right? So they have like a conservative ETF portfolio and an aggressive ETF portfolio. And in the conservative portfolio, there's a 1% allocation into Bitcoin. And in the aggressive portfolio, there's a 3% allocation. So we're seeing increased demand through access to Bitcoin through the ETFs, but also through different models and structures that incorporate the Bitcoin argument, right? The BlackRock report, the optimal allocation of Bitcoin. You know, at first it's a scam, and then it's 1 to 3%, and then it's 1 to 3%, and then it's the most pristine form of collateral in the world. So those are the biggest things of I see what's happening with Bitcoin right now and its natural evolution. One thing before I talk about the funding rates here is that one thing you said is that people said, oh, all the big boys will own Bitcoin. But the thing is that they're offering the ETF. The way the big boys make money is through their management fees. So they're not necessarily the ones that actually own the Bitcoin, right? Now, you can go into different nuance and talk about how in the settlement process of traditional finance, technically you're just a beneficial owner. You're not the real owner. So there could be some legal questions or some legal risk there to the underlying collateral held by these ETFs. But ultimately, it's opening up and providing access. And I wouldn't be surprised if Jamie Dimon and Elon Musk and I should say Jamie Dimon and then Jeff Bezos with their recent stock sales, I wouldn't be surprised if a percentage of those sales were going directly into Bitcoin through the ETF. You know, those guys are really busy guys. They don't really have time to learn self-custody, especially if they're going to put in larger percentages of their net worth. And the ETF opens up this, you know, regulated pathway to get them in. So pros and cons of ETFs, very important. But yeah, so what you see here on this page, and thank you for pulling this up. If you go to the let's see. I want to go to the funding rate. So we should see CoinGlass. Yep, there you go. Funding rate. And just
Do you want the
scroll
heat
down a
map
little
or just
bit.
the?
Yeah, just
Yeah.
that list. Okay. So before I started building People's Reserve, I used to just look at this list all day because that's all I would do is make markets. And if you just hit that 1 year tab there, right, yeah, that kind of lets people understand the power of this. Okay, so here's what a market maker would do in this industry, and let's just use Bitcoin because don't want to talk about there's more risk, there's liquidity risk, there's other things that go on in these other less liquid coins. Bitcoin is the most liquid asset in the entire world. Like we talked about, March 2020, it didn't stop trading. It went all the way down and then it came all the way back up and it never stopped trading. It is 24/7, 365, the most liquid asset in the world. What market makers are interested in is this 60% number. So if you look at DYDX, and the reason I'm going to use DYDX is because it's decentralized, right? So yes, you can do this on Binance or OKX or Bybit, but you're now introducing additional counterparty risk. Whereas with DYDX, it's just smart contract counterparty risk. So you kind of remove the human element as long as you've reviewed the smart contract. So I do like the decentralized solutions. But what you would do is, let's say you're a big market maker and you got, you're dipping your toes into cryptocurrency. And, these guys will dip their toes with like $100 million, right? Because in the traditional markets, they're using billions of dollars to make markets. And now they're finally coming in here. They want to dip their toes. They got $100 million. And for sake of math, let's just call it $200 million. So you got $200 million. What are you going to do? How am I going to benefit by being a market maker in this industry? The first thing you do is you take the $200 million and you buy Bitcoin. That's all you do. The next thing you do is you leave $100 million of that Bitcoin in your cold storage wallet. So the $100 million you have in your cold storage wallet is long 1x. The next thing you do, bridge over your Bitcoin and then go short Bitcoin at 1x through DYDX. And what happens is you're now delta neutral. So what happens when the price goes up 10%, your half of the Bitcoin that you hold in your wallet is up 10% and your 1x short is down 10%. But what's left over? What's left over is this 60%. And that's an annualized rate. These funding rates are paid every 8 hours. But I want to thank you for annualizing it because it just shows you like the opportunity here, right? Like everybody's geeking out about US treasuries paying 5%. Yeah, but you can make markets in cryptocurrency in a decentralized fashion and bring in 60%. Now, these rates do adjust every 8 hours based on the balance of the marketplace, but this is what's attracting the market makers. This right here is what is bringing the attention of the biggest market makers in the industry. And the way that they're going to start out is with the Bitcoin ETF options. So when they start making markets for options on the Bitcoin ETFs, what you're going to see is that Bitcoin will be the best covered call strategy in the entire world of finance. And the reason that is because the implied volatility of Bitcoin is greater than any other marketplace. There exists no stock that any, sure, a speculator might believe this, but a big money player is not going to think, oh, this stock is going to go up 100% in the next couple of months, right? And then if they did think that, they would just buy the stock. They wouldn't buy the call options. It doesn't really exist. The implied volatility is greatest in Bitcoin. So because the implied volatility is greatest in Bitcoin, the premiums that the people who participate in the marketplace, the premiums that they pay are the highest in any marketplace there is. And that's demonstrated perfectly here on this chart, where with Bitcoin on DYDX, you can see it just adjusted because it's a live metric, but you can get around 60%. So you have the 200 million, half is sit in your wallet. If these rates were to hold for the year, which maybe through the bull market they would, through the bear market, the rates are much lower. But through the bull market, if you were able to get just even 50% on $100 million, that's $50 million.
Yeah.
If you had all $200 million in US Treasury bills getting 5%, you're nowhere near that. So you're delta neutral, you have no price risk, and you're collecting these funding fees. And this is just in the decentralized internet economy. we're going to bring that marketplace where people are willing to pay a higher premium because of the implied volatility of Bitcoin into TradFi. And we're going to see that first with the options market on these Bitcoin ETFs. This is a huge development in the marketplace. It is going to increase the amount of liquidity and demand on Bitcoin in ways that are almost incomprehensible.